We start today's market talk. Uncomfortable truth about investment advice is most people don't learn from it. They learn from experience, preferably painful experiences. This should be called the explanation theory of investing. Best is to get mistakes out of the way early when the stakes are low and time available to recover is long. So the trick is to learn these lessons when the tuition fees is affordable, that is early in life. Key issues which we need to analyze. First, Trump had a meeting with Xi Jinping in South Korea. This meeting does underscores one truth. Despite all the talk of multipolarity, the world looks increasingly bipolar. Overall feeling after this meeting is that the worst is avoided, but the tensions remain. Hence, the Chinese markets corrected, the US markets corrected. There was an implicit acknowledgement of that view by Trump also that it's now becoming a bipolar world when he tweeted that the G2 will be convening shortly. So before the meet, the countries that attempt to balance their relations between the two powers have a tough task at hand as battle of influence between US and China will never get over. Chinese PMI data indicated a fragile economy and Xi would be relieved at the trade deal or trade truce with the US. Now, in another set of things, Powell surprised everyone with an attempt to push back against the near certainty on another Fed rate cut in December. Bond yields so rose the moment he said that another rate cut is doubtful. So the bond yields went up above 4, that is 10-year yield. Stock rally halted on both inflation and jobs. Powell said that economy is close to where the central bank wants it to be. So as per him, there is no concern on both inflation and jobs, or no major significant concern. For India, the US-China truce underscores a stark reality, being left behind. Indian stock markets have underperformed rest of the world, and that should make the government accelerate efforts to clinch a trade deal. September IIP data has a paradox. Consumer durables and autos surged on festive demand, but staples are contracting. Food inflation is low, so farm incomes will be at risk. Reason core inflation is low and urban demand is weak is because Chinese imports are capping both prices and growth. So people don't have any spending power. Now coming to FIDI data. So if you see this week, now FIs have again become started shorting index futures. They added shorts in Nifty, uh, that is on Friday, and have become mildly bearish on other indices. They bought some calls, but they also bought puts also. That is a major one, and they sold in cash. So FIs are basically mildly bearish, or you can say medium term bearish. Pros, that is professionals, they they are short on index futures. They have sold calls and they have bought puts. So they are also bearish in terms of their positioning. Clients are mildly bullish in terms of index futures. They are got 84,000 odd long contracts, and they have bought calls and they have sold puts. So they are clearly bullish. So the positioning is that FIs are bearish, pros are turning bearish, and clients are bullish. So market positioning will have to be accordingly. And both FIs are now started again selling in cash and DIs are buying in cash. In terms of monthly data, so if you see from 1.98 lakh short positions in index futures, they became nearly half on the day of expiry. Uh, Became around 92,000 odd short positions because FIs covered their shorts instead of rolling them over. And that is why there was 10,000 odd crore of buying in cash. And now subsequently they have increased their short positions again. They started building up short positions. And there was some short covering which started from mid of the month, because of which the index went up from around 25,100 levels to 26,000 plus. And now again it is retracing because short positions are getting added. Coming to the US, sentiment this week was lifted by big tech earnings and positive trade developments, along with another interest rate cut by Fed. Now, in terms of earnings, Meta, Microsoft, and Apple corrected because earnings were below estimate, but Alphabet gained after Google reported greater than 100 billion in revenue, and Amazon did better than estimates on sales, profits, and subscription revenue. So, if you see, as the possibility of rate cuts reduced in the US, the bond yields went up. So, it has now climbed above 4, that is 10-year yield. The dollar index also strengthened. That is, in addition, the trigger was also uh, the weakness in the yen, because the Japan said that they will not raise interest rates. So the dollar strengthened. Now it is heading towards 100 level. Brent crude halted its upward trend because people are doubtful about the implementation part of the sanctions on Russia. Gold halted its rally, so it has corrected around 2% uh, this week, and so it is, I think, headed lower. It should test this 3,600 odd level. Silver had also corrected to 46 level, $46 level, and then rebounded. So let's see how it progresses. Copper had moved up, but once the dollar strengthened, the copper prices corrected, and also the news about truce between China and the US was also digested, that it is a temporary issue only and not a permanent lasting endeavor. Bitcoin also corrected around 4.14%, basically profit booking, and Fed's cautious stance led to broader risk off. So S&P 500 was flat. Nasdaq has broken above the rising trend line, so which is very positive. It was up nearly 2%. Dow Jones was up around 0.75%. So it is moving up based on now it will be waiting for the financial results, and based on available results till now it has moved up. Now coming to India, India VIX is moving up, has moved above 12 level. It had taken support at 10. So that should be good now. At least there's some volatility which is increasing. Premiums will rise. Nifty, if you see here, it is still above the declining trend line. So that way it is positive, but it neared its record high, but lost steam amid global uncertainty and profit booking. So last week it made a shooting star candle on the weekly chart, which signals exhaustion after the steep rise. Now, if you see on the daily chart, the index is between 25,700 to 26,100 zone, with RSI cooling to around 57.84 level, reflecting waning momentum. Now, if this 25,700 breaks, then we are headed to the lower levels. Now, what lower levels we'll see on the hourly charts. See, hourly charts, if you see here, it it has not been able to break above clearly break below this gap which was here at around 25,700 to 750 level, but and has been range bound in this 26,100 level. So it has not gone above 26,100 level, where it has tried twice and taken support at this 25,700 levels. So we'll have to see if this range holds or it breaks. So if it breaks, then it will head to this 25,400 level, which was the last gap, or it will then try to go to the previous high of 26,200, 300 odd level. So we'll have to see what happens this week. The momentum is halting. One of the reasons for halt in momentum is Nifty Bank. On the weekly chart, after consolidating, it has been consolidating after hitting lifetime high last week. indicating fatigue at the elevated levels. It formed a bearish candle with long upper shadow due to profit booking. Uh, Coming to daily charts, it has come to that breakout level of 57,600 from where it had broken out, and not and made a high of around 58,600 level. So RSI has eased to 62.29. Support is at 57,600. So if this level breaks, then we will see lower levels. The index which is in momentum is PSU Bank on the weekly charts. If you see, it has broken the previous all-time high and it is headed higher. The basic reason is because of the suggested changes by the SEBI chief on Nifty Bank, where they're planning to reduce the weightages of the three stocks, that is HDFC Bank, ICICI Bank, and SBI, to total around 45, and add two more stocks to the indices. So, which among four will be one of them? That is between Union Bank, uh, Yes Bank, Bank of India, and uh, one more. I'm forgetting that name. So among among out of these four, uh, two will be added to the index. So the index composition will become around 14. And so the weightages of HDFC Bank, ICICI Bank, and SBI will get reduced. So we'll have to see, but it will be done over four tranches up to 31st of March. So PSU banks, because of higher expected weightages in the Nifty Bank indices, they would be more bought. They would be bought by the ETFs in higher quantity. So they are going up. IT index has corrected last week around a 1%. So it has now come to the declining trend line. Metals broke out, but then has corrected. So we'll have to see what happens next week and what happens to the dollar. Autos are consolidating. They tested the previous high, and after that, it has not been able to go up. It is consolidating, but it has not yet broken the levels. The October auto sales data, which has come, is kind of on expected lines. Nothing significant which has changed now. Defense also is kind of subdued, consolidating now around the 20 EMA. So we'll have to see in case there is some additional trigger to take the indices higher. Midcaps outperformed actually, were up 2.3% last week, and it has broken above the all-time high. So this is one index which is in momentum based on performance. Small caps are also moving up. They were up around 0.7%. So it is looking up. So if the major indices consolidate, then the money starts moving into small caps and mid caps. So this is what is happening. The one of the main reasons for decline was HDFC Bank in both Nifty Bank and Nifty, and also because of FI selling, which I think on Friday that huge selling was both basically in HDFC Bank and ICICI Bank. Now it has come and taken support at 50 EMA. So if this level breaks, then it will goes to 970 or 940 odd level. So we'll have to see. But now RSI is also declining, so lower levels are expected. Reliance of after all the news and making above going above 1500 level is now consolidating. So let's see if there is additional trigger and it can take the Nifty higher. BEL is one stock which is in momentum. It has, after good earnings, it has moved up from and taken support at 20 EMA and moved up with good volumes. So it is looking up. Let's if we test this previous high and then around 445 level or 440 odd level, and then we'll see what happens from here. Now I'll cover two stocks today. First is Mahindra Finance. It's a diversified product portfolio: vehicle financing, pre-owned vehicles, SME financing, personal loan, mutual fund distribution, insurance distribution, housing finance, mutual fund, AMCs, and insurance broking. While vehicle financing and pre-owned vehicles is their key business, others they are still trying to develop. Now, It's a subsidiary of Mahindra and Mahindra Limited. The company is one of the leading NBFC focused on rural and semi-urban areas. Company finances the purchase of new and pre-owned autos and utility vehicles, tractors, cars, commercial vehicles, construction equipment, and SME financing. RBI has taken steps for improvement in the financial system as reduce CRR, increase liquidity into the banking system, reduction in repo rate. Both all these things will help to expand the NIMs, which should help the profits in FY26 and FY27. They are diversifying into other assets such as loan against property and homes to reduce the dependency on vehicle finance. Pre-provisioning operating profit beat estimates by 3%. They were up around 25% or 10% Q on Q, year on year and Q on Q to around 1499 crore. Management expects 15% AM growth in FY26, which will be driven by strong disbursement growth of 18 to 20% in H2 FY26. On a segmental performance, passenger vehicles and tractor segments are expected to do well. If you see here, their quarterly results, the NIs were up around 5%. Net interest income was up 5% Q on Q. Pre-provisioning operating profit grew 10% Q on Q at 10.8 and 25.4 year on year. And net profit was up 7.5 Q on Q. AUM grew around 13%, so year on year. They are guiding for around 15, and disbursements were up just 2.7, so they are guiding for around 18 to 20% growth. Overall disbursement, so if you see year on year, the major growth came in tractor and pre-owned vehicles, while personal vehicles, CV and CEs declined. So, and three-wheelers also declined, but the major part of the business, that is personal vehicles and CV and CE, are not really growing. So we'll have to see the performance of these two segments for further action on this stock. In terms of business indicators, disbursements were up just 3% year on year. Business AUM was up 13%. Total income was up 14%. NIMs were improved from 6.5 to 7. Operating expenses are higher. Provisioning operating profit went up 25%. Credit cost has decreased, so which is positive to 2.2%. And profit after tax improved 54%. So this is positive. Now, in terms of financial performance, cost to income ratio has come down, so that should help margins. Return of assets is improving, so that should help the profits. Return on net worth is also improving, and asset quality is slightly deteriorated. So the gross stage 3 has increased to 3.9 from 3.8 Q on Q, and net stage 3 has moved from 1.6 to 1.9. The provision coverage ratio has declined. So that means they could have done more provisions and shown less profits. So if you see here, the various ratios, uh, return on net worth is improving. Debt to equity has come down, so that is positive. Capital adequacy is better. EPS has improved. Book value has improved to around 165. So for H1 FY26. So by end of this year, it should be 170 plus. So at around 2 times price to book, this can easily trade at 330, 340 levels. A number of employees has come down, so that should reduce the operating expenses. Coming to valuation, so FY26, it is expected to do a profit of around 273 crore, EPS of around 19.7. ROA will improve to 1.9. ROE is also improving. P is coming down, so it's below 16, and price to book is around 1.8. So there is some value here. Now, in terms of technicals, it faces resistance at around this 345 level, where it has gone twice and corrected from there. So it has broken through the intermediate high after the earnings last week and come back. So at around 300 level, it's a good buying opportunity to get the stock. RSI is rising. Other stock is Crizac. It's at the heart of global student mobility, a technology-led B2B platform facilitating seamless student recruitment across 75 plus countries. It partners with global universities to streamline admissions, ensure compliance, and accelerate enrollments, driving efficiency, transparency, and trust across the international education value chain. So it is basically driving student mobility from 75 plus countries to key destinations, that is UK, Canada, Ireland, Australia, and New Zealand. Uh, provides a digital interface for for the recruitment, compliance, and enrollment support. They have more than 11,000 registered agents worldwide, and they use technology to validate the whole process. They basically earn through contractual partnerships with global institutions, typically a share of first year tuition fees, additional revenue from administration, rebranding, and outreach services to partner universities. So if you see here, uh, it has tied up ties with around 250 plus global institutions. Agents are 13,500. It processed around 9.2 lakh applications last year. Uh, Countries from which applications are sourced are 80 plus, and the employees and consultants are good. So if you see here, the revenues, it did around 850 crore of revenue in FY25. EBITDA is strong, 25% plus. PAT margins are strong. ROE is good, above 30. And it has shown a revenue CAGR of around 100% over the last 3 4 years. Uh, it it takes student applications from India, Nigeria, China, and Kenya, and global institutions for higher education is basically UK, Ireland, Canada, and USA. High growth global B2B platform in education, acting as a vital bridge between universities and counselors on behalf of students. Its platform is global and extensive, working with more than 173 universities across 75 plus nations, with its share of global students increasing to 40% in FY25. Strong domain expertise and diversified agent student network have enabled it to capture 11 to 12% share of Indian students in the UK. With recent expansion into China, Southeast Asia, and Africa, Crizac's deep university ties, proprietary technology platform, and broadening customer base are reinforcing network effects. Deep moats in the UK and highly diversified student profile provide with strong assurance regarding 25% net earnings CAGR over FY25 and 28. So if they're talking about profit growth of 25% over next 3 years, they can easily trade at a 30 odd P. So we'll see that issue. Key strength is the UK market, where it has strong control and shown good performance, and it is able to scale up well. So coming to financials, they did in Q2, they did around 24.92% growth in revenue. EBITDA margin has improved to 36 odd, so which is very strong. And PAT margins have also moved up. So they did an ROE of around 8% for the quarter. So the full year it should be above 30%. And they process around 99,000 odd application, so which is good. And so if you see here, strong earning growth, cost of services are also moving up, but broadly stable with respect to the revenues. Cost per active agent has come down, so that should help the profitability and margins. And revenue per application has been growing. Now it is 30,000 odd rupees plus per application. So they did around 1 lakh application per quarter. So you can easily calculate their earnings. So they did a revenue of around 8,409, 850 crores in FY25. They will do around 1,042 crore in FY26 and 1,200. So they were 1,247 in likely to do in FY27. So they are likely to grow around 20% plus in revenue. EBITDA margins are going to be stable around 26%, so which is good. And PAT margins are going to be around 19 odd percent. With an EPS of around 11, as I mentioned, it can easily trade at 30 times FY26 and 13.8 in FY27. So taking a mean of around 12, 12.5, it can easily trade at 350 odd levels. If you see here, ROEs are stable at around 35%. ROIC is also stable at a similar level. So it is doing well. So this stock listed this year in July and moved up. went up to make a higher around 360 and then dipped. And now after the earnings, it went up and now it has again come up. So around 300 is a decent buying opportunity for this stock for a target of around 350, 360 in a year's time frame. So I have finished. We will take questions now.